afternoon. I am Tysha Johnson reporting from TJTV News on the topic, the financial sector is unprepared for the future impact of climate change in the Bahamas. Climate change is one of today's most urgent global issues, significantly impacting the financial systems of vulnerable nations like the Bahamas, where 80% of the land lies less than a meter above sea level. The United Nations defines climate change as long-term shifts in temperatures and weather patterns, mainly due to human activities, especially the burning of fossil fuels. This change poses significant challenges for the Bahamas' financial sector, which is the part of the economy that provides financial services to individuals and businesses. It includes banks, investment companies, insurance companies, and real estate firms, threatening property values, loan stability, insurance viability, and overall economic security. 4 key climate challenges for the Bahamas' financial sector. Firstly, rising sea levels. With most Bahamian land below 1 meter above sea level, rising seas are a dire threat. The Intergovernmental Panel on Climate Change projects that sea levels could rise up to 1.1 meters by 2100, endangering properties and driving up insurance claims. To mitigate these risks, the real estate and insurance sectors need enhanced flood resilience measures. Secondly, increasing hurricane intensity. Climate change has amplified Caribbean hurricanes, as seen with Hurricane Dorian's $3.4 billion in damage toll in 2019. Munich Re, a major reinsurance company, notes that without climate-focused risk modeling, such as the Paris Agreement Capital Transition Assessment Transition Model or Task Force on Climate-Related Financial Disclosures, integrated assessment models, banks and insurers will struggle to project losses, impacting stability and investor confidence. Thirdly, economic dependence on tourism. Tourism generates roughly 50% of the Bahamas' gross domestic product, making it vulnerable to climate-related threats like coral bleaching, biodiversity loss, and extreme weather. The World Travel and Tourism Council warns that declines in tourism will directly impact revenue, underscoring the need for economic diversification to reduce reliance on climate-sensitive industries. Fourthly, regulatory and ESG alignment. The growing interest in environmental, social, and governance factors underscores the need for sustainable investments. The Bahamas lacks stringent climate-focused regulations, making it less attractive to eco-conscious investors. Aligning with ESG standards, like those from the Global Sustainable Investment Alliance, can make the Bahamas more competitive in this growing market. Now let's look at 4 strategies for climate resilience. Firstly, climate-integrated risk models. Financial institutions should integrate climate data on sea levels, storms, and resilience into risk assessments for more accurate loss projections. Secondly, resilient infrastructure investment. Coastal infrastructure upgrades will help financial institutions withstand extreme weather. Collaborating with government agencies can prioritize essential infrastructure. Thirdly, economic diversification. Developing sectors like technology, sustainable fisheries, and renewable energy can reduce dependence on tourism and create a more resilient economy. Fourthly, strengthening ESG regulations. Aligning with global ESG frameworks, such as the Task Force on Climate-Related Financial Disclosures, will attract sustainable investments and boost transparency in climate risk reporting. By addressing these challenges and implementing these strategies, the Bahamas' financial sector can strengthen its resilience against climate impacts and promote economic stability for future generations.